Eric Muathe with Muathe.com with world market analysis for the weekend of March 18th and March 19th, 2017. Let's take a look at world markets here at the close. We can see that Asian markets were, let's call it, down for the most part or slightly unchanged. Kospi was up. If we take a look at the European markets at the close of Friday's session, we can see for the most part slightly up day, not much change. And let's take a look at the Americas here with 1 hour to go before the close, and we are looking at the Brazilian market, which is down about 1.9, Canadian market unchanged, S&P 500 unchanged, and here we see the Chilean market, which is breaking out, is up about 1%. Let's take a look at those world market charts. We begin with the Australian market, and again for, I guess, last couple of weeks we've been looking at this potential for a breakout above 85.51, which is the recent weekly closing high. If it can take out that recent weekly closing high, that would be great for bulls. But we've been talking about the challenges. If you take a look at the monthly RSI, it's been struggling to hold above the recent RSI top line. If you draw it like that, connecting recent RSI highs on a 3-year monthly chart. So until we can break out above this RSI resistance line on a weekly time frame, here's a market that needs to prove itself. Keep in mind, we've been talking about the monthly, which needs to clear 2015's monthly closing high if it is to break out. The level is 5898.48, and of course we've been talking about the potential for topside resistance. So until we can clear those two aspects, a price breakout and move above the red line, chances are this market is sideways to even down. If we take a look at the Hong Kong market, you can see here for the week it was pushing to fresh daily closing highs. So it did record a fresh 52-week closing high, as you can see here. But pretty much what it did is come back to test this level here, which was a break zone here off the highs. We broke below that same level here off these short-term highs, and as of the highs of the week on the RSI, this is where it's testing that line. If it hits that line with resistance, then we can expect that this is going to be the next swing trade is going to be down. In fact, if you take a look at the monthly, we can see that the level we were talking about as potential challenging area, if you take a look at this long-term monthly chart going back to the lows of 09, so there was a trend line here. Once we broke through that trend line, the market went down in 2015 into 2016. So we're talking about this break, went lower. We've tried to move above that same resistance line or the break line here. We've been unable to do that. So if the market wants to do higher or higher prices, it needs to trade above that previous break line. In other words, this level here, it needs to break out. Also on the monthly RSI, we would need to see a confirmed breakout. Right now it's doing its best to hold above this level here. This level was the break level here of the highs. We tested it here in 2016 at the highs here. We pull back for a multi-month pullback. Now we are coming back to test this line. Of course, market bulls would like the market to move above this line of resistance. So what is needed here is breakout in price and breakout for the RSI if this market is to see higher prices. Otherwise, confirmation of resistance in terms of price being rejected here again, or the RSI being rejected here again, will tell us where the next meaningful direction is. If we take a look at the Chinese market, we can see here that the challenge is to break out above 2016's weekly closing high, and the level to watch there is 3261.94. So a breakout is needed if it is to see higher prices. Keep in mind that we are still struggling to move above the top side RSI resistance line. So if the market is to move above the current levels, keep in mind it's been trading in a range. In fact, we can even say it's been trading within this range going back to middle of 2016. So if it's to see higher prices, it would need to take out the weekly resistance and also move above 3261.94, which is 2016's weekly closing high. If we take a look at the Kospi and we have a monthly chart going back to 2004, we can see that it is moving above this huge multi-year wedge. So there's an argument here that the market is breaking out. So the South Korean market, as long as it can hold above this huge wedge, signs are it could see higher prices. If it can hold above 2015's monthly closing high at 2127.17. So if it can hold above that price range, that's good. If it fails, then we'll know that it's running out of momentum. Also, we can see that on the monthly chart, it is doing its best to break out above this topside resistance line. Otherwise, failure to hold above this line in the coming weeks and the coming months would give us an idea that it is running out of momentum. So right now it's doing its best. It's doing exactly what it needs to do. We see for now a monthly price breakout, and also we are trying our best to move above the previous and the current RSI topside resistance on the monthly chart. If we take a look at the Nikkei, we can see that the Japanese market is doing its best to break out above the current daily closing high on a 52-week time frame of 19594.16. What we see here is it's been trying to do so over the last couple of weeks. So far, not convincingly above that level. Also, we've been unable to move above this recent break on the RSI. So if it is to break out, it needs to clear this RSI resistance line. Otherwise, failure, multiple attempts to break out and no success. If it can't hold above current levels, keep in mind we have a nice wedge formation. So this is good formation. All it needs to do is break out. Otherwise, failure to break out and then a break back below the wedge would be bearish. One thing we can see here, if we take a look at the weekly chart, we can see that the market has been making an attempt to move higher, but at the expense currently of the technicals. So this negative divergence could actually set the stage also for a pullback. If we take a look at the Nifty, we can see a huge breakout, a gap up this week above the previous weekly closing high at 98 or 87.75. So on a weekly breakout, this looks like as long as it can hold above this number here, which is the 2015 weekly closing high, that looks like a decent breakout. It just needs to defend that level, and this market could have more upside. What market bulls want to see here is the market moving above 69.1 and holding above 69.1. The more it can stay above 69.1, the more there's a chance that it could see higher prices. So it looks okay, just needs to hold above the previous weekly closing high going back to 2015. RSI also short term would need to be above 69.1. The one thing I do point out here is this possibility of topside RSI resistance coming in play. So if we start the week with a reversal here, or let's say in the coming week or so, if we see reversal on this RSI line, and also if the RSI moves back below 69.1, that would be our tell that the market is starting to run out of momentum. But for now, looks good depending on how you are positioned, but this breakout is good enough. We take a look at the daily, and as long as the daily is also holding its daily RSI above 69.1, we can expect this market to continue being stable to bullish. So the RSI has been and continues to be above 69.1. That's a good market. We also broke out above the recent 52-week weekly daily closing high. So as long as the market is above this daily closing high from 2016, the market should be looking stable to bullish. Also, one thing I should point out here, if you go back to the previous video, we talked about this line here, this RSI line, the topside daily RSI resistance line. Once the market jumped above this level, so we're talking about this period here, right there. Once it moved above that level, the market's been using this line for short-term pullback support. In other words, if we extend this line, we can see that where the market's been finding support, for example here, has come on the back test of this line, and here we hit this with double bottom for the lows here. So what we can say here, as long as the market is holding this line, we have to assume that this continues to be a stable to bullish market. Also, we can see that on the monthly, it's a good breakout here as far as the monthly price is concerned, moving above 2015's monthly closing high of 8844.60. That's good. That's what the bulls wanted to see. So the market is moving above that price range. That's a good breakout. The only problem here is something I've pointed out before, is the quality of the breakout is missing. You'd like the MACDs to be at 3-year highs at the minimum. So it's not what you want to see. And also you'd like the RSI to be trading at 3-year highs or above 69.1. So yes, we are seeing a price breakout, but what we are lacking here is the quality. And so as long as the quality is not there, I would speculate that, unfortunately, in my opinion, even with a breakout here, chances are it could easily roll over and run out of momentum. Why? Because the technical strength is not there. And again, check the description for a link explaining the breakout qualities that we are looking for, qualities that we see in superior breakouts. And in fact, as an example of this, you can see this nice period here in 2014 into 2015. That was a good move by the Nifty, and we can see that it confirmed quality, because at that point, so we're talking about this period here where we have a breakout at the beginning of 2014. We have a price breakout, and so we can tie them together here. We can see here, similar to this price breakout, the difference is here the RSI was jumping to 3-year highs plus. So that was minimum requirement met. And that's why we see this fantastic run. Right now what we are seeing here is the RSI is not moving to 3-year highs. So that's a negative. If we take a look at the MACDs in both time frames, so we're talking about this period here, this period here, as compared to the current breakout here, we can see MACDs were moving to 3-year highs. MACDs were moving to 3-year highs. We only need one of the MACDs. Unfortunately here, we are seeing that neither of the MACDs are moving to 3-year highs. So again, we are lacking quality at this particular time when the Nifty is breaking out, suggesting that it could not be, or it is not the best breakout, and probably eventually runs out of momentum. If we take a look at the South African market, we can see day to day it is coming to test the top side of the RSI resistance line, already responding to it. So short term, that's the challenge. Also, we are coming back to test the line that was a problem of the highs here. This is where the RSI broke down. So we take that information. Anytime we show resistance on this line, we know that the market is due for a pullback. And right now, over the last 2 days or so, we've hit that same line and we seem to be stalling. So day to day, the South African market is showing signs of a pullback as long as it is unable to move above those two lines. If we take a look at the EuroNext 100, and again, here we're going to be using this to take a look at the French CAC 40. We can also take a look at the FTSE using this chart, and also the German market. So one thing we can see here as far as European markets are concerned, they are moving to fresh daily highs, which is great. One thing they have to do is clear the topside RSI resistance line. In other words, what we are doing here in essence is we are making an improvement in price highs, but the RSI is not following through. there seems to be an RSI topside resistance line. So in other words, we can see that there's a line connecting RSI highs that is in play. So the market would need to take out this line. Otherwise, the more it continues making daily highs without movement above this line, eventually that negative divergence sets the stage for a pullback. Keep in mind, we've been watching the monthly chart, because what we are doing on a monthly chart is coming back to test this recent break. This is 3 years worth of monthly data. We broke down here off the highs there. And so what the RSI is doing is coming back to test this line. What we need to do here, if market bulls want to move the market highs, they need to clear this red line. Otherwise, at some point on a monthly basis, if this line is confirmed as resistance, that would be a sign of a market that wants and is ready for a pullback. The reason why this is a critical line is if you take a look at all data monthly for the EuroNext 100, we can see that if that is what is happening, is this line goes back to 09, this break in 2015. We've been watching this level here because a confirmed resistance on this line is a problem, given that it was also where we broke down here off the highs of 2007. We broke below that line. We went into a major bear market. So definitely would want to watch this, because confirmed resistance here would suggest that we are due for a major pullback. If we take a look at the Canadian market, as of right now, it continues to struggle to hold above 2015's monthly closing high at 15,625.73. So without a breakout here in price after multiple months of trying to break out, without a breakout, chances are that eventually leads to a market that is due for a pullback. Otherwise, bulls need to take out this line if there's a chance of recording substantial improvement above where it's been trading over the last couple of months. So a breakout is needed. Otherwise, we've been failing, trying to hold above that level unsuccessfully. Ultimately, with a failed breakout, this market is generally pointing down. If we take a look at the Brazilian market, we can see one of the reasons why it's beginning to struggle is because of this RSI resistance line, something we've been talking about for many weeks. This was the break in 2010. And now we come back to test that line. Keep in mind, previously we had tried to break out above the line here and failed. In fact, we even tried to break out above the red line here in 2010 and failed at those highs. And here we seem to be forming a well-constructed double top. If that's the case, chances are, as we've been suspecting, the next major direction for the Brazilian market is down. In conclusion, if we take a look at the Chilean market, we can see a major breakout for the last couple of weeks. And we can also see that on the monthly time frame. And here is our 3-year monthly chart. We are having a good price breakout. As you can see, prices broke out on a monthly time frame at last month, and now we are following through. We can see here that the RSI is moving to 3-year highs. So this one meets the minimum requirements we are talking about, hence the acceleration. We can see that both MACDs, as far as the Chilean market is concerned, is also breaking out. So both MACDs look good, no problem here. So we have a situation where both minimum requirements are met in terms of RSI and MACD. So looks good, which might explain why it's doing well. The trap here is that maybe this is eventually going to be a trap. I'll show you why. If you take a look at the all data monthly, we can see we are coming back to a level that could be where it stalls based on where it broke down here in 2008 and where it broke down again in 2011. The break here was off the highs of 2007. The break here off the highs of 2011. We draw a line connecting both places. You can see it's coming back to test the same level. So month to month, if this is confirmed as resistance, chances are this is where it stalls. Eric Muathe with Muathe.com. As always, good luck, peace, and blessings. I see.